The topic today, for anyone who missed it, is foreclosure fallout. And I'm just going to try to bring you guys up to speed in terms of the federal reforms and rules and regulations that have impacted foreclosures, which are relevant particularly to any of us. Is anyone here a real estate paralegal, and real estate in particular? Okay. And is anyone doing real estate litigation, like foreclosures and workouts now? Okay. So a fair amount. Okay. Well, we're going to try to incorporate a little bit. Do you guys do commercial or residential? Okay, we'll talk a little bit about that. Obviously, the foreclosure crisis focuses on residential, so that's where most of it will be. But even for the rest of us who are not directly involved in the real estate industry, how many people are homeowners? How many people think the value of their home was maybe impacted a little bit in the last couple of years? Okay. Okay. So these things are relevant, and I'll try to just do this in broad stroke. Audrey prepared a wonderful handout for anyone who's interested in the nitty-gritty. You've got every piece of legislation pending now in Washington that has anything to do with housing. Also some background on how the legislative process happens. Obviously, we're not going to cover that. If you look at it, you can see why we're not going to cover that, because we only have an hour. But I'm going to talk about sort of the buckets that those fall into, so you guys have a good idea of what's going on, and if you want to get involved, and what you can expect. Obviously, it also, in terms of your careers, if you're doing residential real estate work, there'll be some relevancy here for you to that. How many people remember when the real estate crisis was what we call the subprime crisis? So it really only impacted people who were in the subprime situation. When that was happening, I kept saying, all they need to do is come talk to some of us here who are right at ground zero, and maybe we could solve the problems. Of course, that did not happen, and because of that, it became a much bigger problem. And if you look at slide number 1, not only is it a bigger problem, but we also now have an entire industry, as you know, built around foreclosures. We have realtors specializing in foreclosures, we have lawyers specializing in foreclosures, we have service providers specializing in that. So because of that, this is something, because the problem's bigger, because there are now so many people with a vested interest and careers based on foreclosure, it's not something that's going to go away anytime soon. This is going to be with us for a while. People have agendas. Now you all, I'm guessing, are here maybe because you're a little interested in the subject matter, but probably for the continuing education credits. I like to just be real honest with everyone up front. The reason I'm here is for my kids. Does anyone here have children? Okay. Does anyone here know children? Okay. I have 2 kids. Brooke is 15, and my daughter Devin is 17. And I feel a huge responsibility. I was very close with my 4 grandparents, and we grew up in New York. My one grandfather was a New York City fireman. The other one was a kosher butcher in the Bronx. Obviously very conservative financially. That's not the world that our kids are growing up in today. And if you look at actually slide number 2, you'll see a photograph from Occupy Wall Street. Does anyone have kids who are getting close to graduating or recently graduated? Okay. We as parents, we as a society invest a lot in our children, a lot of heart and love, and nowadays with the cost of education, a lot of money too. And the goal as a parent, your goal is to get your kid ready for the world. That's the most important thing you can do. Unfortunately now, if anyone thinks that the world is ready for our kids, they have not picked up a paper or turned on the television. We collectively have done a pretty good job of messing things up. And I feel very passionate because of the legacy my grandparents left, and I think that generation, I'm sure a lot of you can relate to that. They paid cash for things, they didn't use credit cards, they didn't buy things they couldn't afford. We've really messed it up. And I think, you know, there's a lot of the blame game going around. I think that the problem's not going to get solved unless all of us take a little responsibility for that, and on every day try to change things a little. When you're driving past those signs that say, you know, at the used car dealership that say, no credit, bad credit, no problem, you know, it's time to take a moment and say to your kids, you know what, you see that sign? It's wrong. There is a problem. Because our kids are picking up on those messages. And that's why I'm here today, is to try to help, you know, cultural values shift. Our values are shifting right now. And if you take a moment and you think back to 10 years ago, just out of curiosity, 10 years ago, how many knew anyone who had been in foreclosure? Now, how many know someone, a friend, a client, someone who's been in foreclosure? We know from a psychological standpoint that the more often you see something, the more likely it is to become normal. So if we're any indication, our cultural values are shifting. And when I wrote Foreclosure Nation, the goal was that we not become a nation where foreclosure is normal. But obviously that's not happening. So my point with this is I hope as we go through this talk, you'll keep things in perspective and think back If you look at the next slide, the foreclosure bus tour, anyone ever see Back to the Future with Michael J. Fox? Okay, remember that scene where he goes forward after Biff had taken over the world and everything has just gone to crap and there's like gangs fighting in the streets and stuff like that? That's what this foreclosure bus tour reminds me of. Because if you all saw this 10 years ago, you would probably have gasped. What do you mean foreclosure bus tour? That must be, that's something on Saturday Night Live, right? That's a joke. Now, you look at this and no one thinks twice. So my whole point with this is, as we go through this, just be conscious of where we're going with these federal regulations, and it's up to you all individually. That's one of the great things about our country. We all get to decide what we want. No one gets to tell us. I just think it's important that you at least be conscious, everyone be conscious, of where we're going, and that this process not happen without us really taking a moment to realize what we're doing. In any event, the federal regulations, is anyone familiar with sort of what's been going on in Washington about foreclosures? Okay, so we're going to talk, sort of buckets, basic buckets. And the buckets, if you look at your next slide, fall into two general buckets. The first is what I call the triage initiatives. Those are things that Washington has done to just try to immediately stop. It's like if your car broke down in the middle of the road and your family's in the car, that's just getting your family to the side of the road so they're safe. You're not worrying about fixing the car yet, you just want to get them out of the way. So the first bucket, and if I'm talking too fast, let me know. The first bucket, I'm a New Yorker, The first bucket are those triage initiatives that are designed really to sort of stop the bleeding, try to help people from moving out of their homes for now, try to keep the mortgage money moving, try to keep the foreclosure system moving, those short-term fixes just so that, triage, like triage in a hospital. The second bucket from Washington has been more reforms, federal reforms along the lines of longer-term fixes, fixing the systemic problems that caused this crisis in the first place and punishing the bad guys. And one of the problems we've had, of course, and we all know, everyone's familiar with the robo-signer thing? Okay. One of the problems we've had, of course, is if we use the car analogy again, we are trying to fix the car while we're getting our family out of the car and to safety. So in other words, we're trying to do the triage stuff and the reform stuff at the same time, and because of that, it's actually caused some more problems, which we'll talk about in a little bit. The next little picture there, Stop Preventable Foreclosure, is really there because we're going to talk a little bit about the triage initiatives first. And those triage initiatives have fallen into three buckets. The first is the foreclosure intervention alternatives. Those are the things that Washington has done to just stop foreclosures for now, if they can. The second are community preservation initiatives, because we're losing entire communities, and some of you may be aware of some of those pockets. If you've ever seen those sort of hot maps where they show you the state of Florida and where there's the most foreclosures, those are obviously in lower income neighborhoods or sometimes in new construction type neighborhoods that just people walked away. But community preservation initiatives to avoid those communities from falling through the cracks. And then leveraging the GSEs. Everyone knows the GSEs are Fannie Mae and Freddie Mac and FHA, and obviously the government, they control together about 90% of the mortgage market, and the government in turn now controls them, especially since Fannie Mae and Freddie Mac were put into conservatorship in 2008. So the government has been using those entities to try to fix the mortgage problems as well. The next slide, if you look at, is more detail on that first set of initiatives, which is the foreclosure intervention initiatives. And there are 7 flavors of those. Is anyone familiar with what the government's been doing to intervene with foreclosures? Is anyone? Modifications. Anyone know something else? I'll give you a hint. It's on the slide. Short sales, the new refinance initiatives. So these are the things that the government, they've been trying to address junior lien holders because sometimes they won't allow the modifications. They've also been talking about principal curtailment. Has anyone heard of principal write-downs? Has anyone ever heard of that? Anyone who's heard of it, anyone agree or think principal write-downs a good or bad idea? That's where the government, if you owe $150,000 and you're in default, that's where the government would say, well, or the bank would say, you know what, we're going to forgive $50,000 of that. You only have to pay us back $100,000. And obviously, it's probably one of the hottest contested issues, because if you're not in default, it's obviously not fair to you. You're doing the right thing, and the guys who are not doing the right thing, either because they can't or they don't want to, are getting basically free samples from the bank. The other bucket of initiatives has been unemployment, and we'll talk about that. And then the last has been the foreclosure prevention events. Has anyone seen those foreclosure conferences and things advertised on TV? Okay. If you look at the next slide, modifications, this will just give you a good idea of how many modifications. Now, this is under the government's HAMP program. Has anyone heard of a HAMP modification? President Obama came out with a housing solution, which was called Making Home Affordable. That was about 2 years ago. And the first solution, the first concept program under Making Home Affordable was the Home Affordable Modification Program, which is called HAMP. It was supposed to help 4 or 5 million people. As you can see from here, this is for Florida. It didn't quite cut the mustard. Anyone know why the HAMP modifications didn't work? Well, partially because everyone who heard about it got online, and it wasn't meant for everyone. So it really clogged up the systems. The bank wasn't ready for it. Partially because banks don't want to give modifications. I mean, if you are performing and you're paying your loan, anyone here work with banks? The banking culture is such, people don't pick up the phone and call the bank and say, you know what, I have buckets of money here, I'd like to give it to you and pay back my loan. The only people who call the banks are the ones who are saying they don't have money. So the banking culture is such that when you call the bank and say, I can't afford the loan, for 100 years they've been trained to say, well, let's really put a lot of pressure on that borrower and see if they're telling us the truth or not. That's just how it works. Well, they did that with the HAMP modifications, and one of the rules became, in order for us to even think about giving you a modification, you have to be in default. 3 months default. Now, is there a little problem with telling Americans that they have to default on their mortgage to get help? No. It's created a little bit of a conflict, and we'll talk about that a little bit more. So that's another reason it didn't work. Any idea why the other second program was the HARP refinance program, which was Home Affordable Refinance Program, HARP. Any idea why refinances didn't work? Someone's in foreclosure and letting them refinance. What's one of the biggest problems that people have here with their homes? Underwater. They're underwater. And the HARP refinance said if you were more than 125% underwater, you can't qualify. Now, that was also supposed to help 4 or 5 million people, and it didn't work. Last week, so here in Florida, I mean, people are, 50% underwater. Last week, the Obama administration came out with HARP Phase 2. Did anyone hear about anything with the new refinance program? HARP Phase 2 basically eliminates that 125% cap. So hopefully it will help. Any idea? The next slide will show you refinances. 45% of those people in Florida with mortgages are underwater. Do you guys realize how big that is? Almost half of people who have mortgages here are underwater. That's the #1 reason why people are defaulting now. So do you think there are going to be more defaults in Florida?
You say walk away?
Yeah, strategic defaults, yeah. 75% of the people who are underwater have mortgages now with interest rates that are higher than market. So if you could get a 4 or 5% interest rate now, 75% of those people who owe the bank more than their house is worth have interest rates of like 7 or 8%, which gives them more of an incentive to walk away. Even 53% of people who are not underwater are paying higher than current interest rates. There are 19 million people with loans insured by Fannie Mae or Freddie Mac who have interest rates in that range that are higher than what they could get today. The next slide explains some of the other obstacles to refinancing. So the negative equity, you're right, is one. Bad credit was another. 60% of the people in this country now have worse credit than they did 5 years ago. The other was the cost, which this new HARP Phase 2 is eliminating some of the costs. Here's something interesting, the representations and warranties. When a bank has a loan right now, they're actually on the hook to buy that loan back if they've sold it, if the representations and warranties that they made to the company that they sold it to, which is often Fannie Mae or Freddie Mac, have any falsity. So if there was fraud, any of those things. Once it's refinanced, the new lender may be on the hook for those representations and warranties, so they didn't want to refinance them. So the new HARP Phase 2 waives that liability. So in other words, if we do find out